Starbucks stock, currently trading at $101 per share, is a very popular dividend stock for a couple of different reasons. Now, the first reason is over the past decade, it has seen some phenomenal share price appreciation. It's up around 195%. Now, the company has a decent starting dividend yield sitting at around 2.09%, but what's really impressive is the dividend growth. If we come over here on Seeking Alpha and click on dividend growth, you can see that their 10-year dividend growth compounded annual growth rate is sitting close to 18%, so they have seen phenomenal dividend growth. The 5-year sitting at 12.5 and the 3-year sitting at 9.37. So when we look at this dividend history, you're going to see a very clear picture of a company committed to increasing their dividend payouts over time. In 2013, their dividend payment was 11 cents per share every single quarter. Jump forward to now, it is now sitting at 53 cents per share every single quarter. And if we jump back over to our summary tab, you can see the past year for the share price has actually been really solid. It's up around 30%, and year to date, it's traded fairly flat, up around 0.75%. Now again, if we look at the dividend yield, it's obviously not a super high dividend yield, but we need to be looking at dividend yield on cost for a dividend growth company because that's where a lot of the value is going to come from. So obviously, if we would have invested in this company 10 years ago, our yield on cost would be over 6%. And you can see as recent as around 2022, you have opportunities to get a yield on cost of around 3%, which is pretty close to what my yield on cost is because I added this company to my portfolio in 2022. Now, what's interesting about this company is if you zoom out and look at about the past 30 years, they have way outperformed the market and have seen phenomenal returns. But what's really interesting is they still have very high projected earnings growth. Now, where is this high growth rate projection coming from? And obviously they do have some competitive advantages such as their customer loyalty, their membership program, and just their overall brand is very strong. But what we need to understand is a lot of growth is projected in their international markets such as China. This is a graphic that was put together at the end of 2020, and you can see there was over 15,000 Starbucks in the United States during this time. Canada had about 1,500, the United Kingdom over 1,000, South Korea 1,500, and Japan had over 1,600, and China was sitting at 4,863. And all of these countries that are filled in with green also have a few Starbucks as well. So that's a lot of Starbucks internationally, but still, we can see Starbucks has recently announced they're committed to reaching 9,000 stores in China by 2025. That's pretty rapid growth considering at the beginning of 2021, they were sitting at about 4,863. Come back to this article and scroll down just a little bit, and you can see Starbucks achieved 10% outlet growth in China during its second quarter of 2023 to reach 6,243 stores nationwide and will accelerate even faster on new store growth in the second half of the year, according to Belinda Wong, CEO of Starbucks China. So yes, even though this company has seen a lot of growth in the past, that growth rate is still projected to be very high, which is something we will need to take into account when performing our valuation. So we need to look at a few different valuations for Starbucks to see what a good intrinsic value is and when a good time to buy the stock is. So we'll be jumping into my stock valuation spreadsheet as always. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So let's go ahead and come up here and plug in Starbucks stock ticker, and I'll hit enter, and you can see all of this data will automatically load in. Now, we've already talked about the dividend a little bit, but we didn't touch on the payout ratio. Payout ratio is currently showing 65.9%, which is actually a pretty high payout ratio for a company with high projected growth rates. So let's go ahead and jump into that just a little bit. If we come over here, click on dividends and click on dividend safety. And by the way, you can get a 14-day free trial to Seeking Alpha at my link in the description if you like what you see. But if we scroll down here again, you can see those dividend payout ratios sitting at around 65% like we just saw on my spreadsheet. But if we come down here and look at the cash flow payout ratios, dividends are paid out of free cash flow, and you can see that's sitting at around 50%. So that's actually a little bit higher than I would typically like to see it, especially for a company that is trying to achieve very rapid growth. Now, I don't think this is necessarily a problem for Starbucks. I still think that growth is very attainable, but this is something I'll be keeping an eye on moving forward. But if we come down here, we can see analysts currently have a target price of around $115 per share, institutional ownership around 72%, and a beta of 0.93, so the volatility will be just a little bit less than that of the market. But the first valuation we will be looking at is Graham's valuation. You can see the formula he laid out for us here. So we need to plug in our earnings per share projection, and this is a forward-looking projection of $3 3.43. And then we have our growth rate projection. I'm staying pretty close to analyst expectations of 17. Again, a pretty high growth rate projection due to the international markets. Once we get that, we multiply by 4.4, which is the average yield on AAA corporate bonds, and divide by Y, which is the current yield on AAA corporate bonds. And at the time of this video, it's sitting pretty high at 4.59, which is the highest it's been over the past 2 or 3 year period, which is going to really push down this valuation quite a bit. Before 2020, really the current yield on AAA corporate bonds was sitting closer to around 3.5 for quite some time. And you could see if that was the case right now, this valuation jumps up quite a bit to around $103 per share, pretty close to their current trading price. But due to current market conditions, this valuation is going to be a little bit lower. Now, the next valuation we'll look at is the discounted cash flow analysis. We're going to see how much free cash flow the company is going to produce in the future to calculate intrinsic value. So we need to project a growth rate to those future free cash flows. So to do this, I looked at the company's historical free cash flow, and you can see it actually jumps around quite a bit. With the growth rates, we have massive free cash flow growth here, pretty low free cash flow growth here. But moving forward, I'm projecting a free cash flow growth rate of 15%. So I'm applying that growth rate projection to the projection for 2023 moving forward, and I'm also applying the 15% growth rate to the terminal value, which is the sum of all the future free cash flow past the year 2031. I then found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt to get their equity value divided by shares outstanding, and came to a discounted cash flow price per share of $95.47. Now, the next valuation we'll look at is the multiples valuation. And what we're doing is we're looking at companies that are similar in structure to Starbucks. We're taking their stock price, dividing by the earnings per share to get the price to earnings multiple. And basically what this is going to allow us to do is see how the market is valuing these companies that are similar to Starbucks. So once we have the price to earnings multiples, we take the average for these comparable companies, we multiply it by Starbucks' current earnings per share, and this gives us an intrinsic value of $97.49, pretty close actually to what we just got for our discounted cash flow analysis. Now, the next valuation and the last valuation we'll be looking at is one of my favorites for dividend paying companies, and that's the dividend discount model. And the idea behind it is we should be able to value a company based on how much it pays out in dividends and how much that dividend is increasing over time. So what I've done is I plugged in the quarterly dividend payouts for this company so we can see how much they pay out each year, and we can see those year over year dividend growth rates. We had a really good year here at almost 14%, almost 10% here, around 9%, and then around 8%. So overall, pretty good dividend growth over the last few years. That's an average growth rate of over 10%. Moving forward, I'm projecting a dividend growth rate of 6.25%, discount rate of 8%, and that gives us a dividend discount model price per share of $128.71. So when we jump over to our output tab, we'll see the 4 valuation models that we use. We have Grams at 79, multiples at 97.4, discounted cash flow at 95.4, and dividend discount model 128.7. So when we average all 4 of these together, we come to an intrinsic value of $100.14. Now, the current trading price for the company is sitting at around $101.59, so a very slight difference between the intrinsic value and the current trading price. With a 10% margin of safety, you could see our acceptable buy price sitting at around $90.12, with a 20% margin of safety sitting at around $80.11. Now, what you need to understand is there have definitely been opportunities where the company has traded within that range. Over the past year, you can see in late 2022, we saw it get as low as around $78.20 per share. I personally bought into this company when it was trading at around $78 or $79 per share, so I've seen pretty nice returns over the past year. I'll blow this chart up just a little bit, and you can see right here, Starbucks, I'm up around 31% currently on this position, so I have seen nice returns, but I'm even more excited about the growing dividend payouts that I will receive from this company. So there you go. There's a quick analysis on Starbucks. I don't currently plan on adding more shares at its current trading price, but I do think we will see long-term some pretty nice share price appreciation due to that international growth. But go ahead and let me know what you think of this company down in the comments down below. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.